Hi there. Good afternoon, good evening, guys. This is your own Raghu here. Today, I just want to do a post-market Nifty analysis from learning perspective and see how the trades went and where we could have taken the trades. And we will bring out a new video on Monday's view because tomorrow is a holiday. Now, let's quickly recap how the day went. Today was the much expected fall in the first couple of hours. Market went really down. Now, where were the signs? Purely from a pivot standpoint of view, if you observe, yes, market from a long-term point of view, we are in a downtrend. I'm sorry, we are in sideways market. If you go to hourly time frame, I have informed you. So this is the hourly time frame. See, from 1st November, market is going sideways. We don't clearly have any direction. So how we could have traded today? What were the signs we should have picked? So we have pivot, we have a descending CPR. So generally descending CPR indicates market is going down. So how did market behave last couple of days? Okay, previous to previous day market went down from CPR, came back to CPR, went down, indicating double top and weakness at the top. The next day there was slight gap down near S1 pivot, that is yesterday Wednesday. Market went to tested the bottom circuit of the CPR and again came down, and it was a tight range until last 30 minutes. What happened in last 30 minutes? Market fell. Now, since market broke this range in the last 30 minutes, what would be our sell zone? Okay, this would be our sell zone, right? This is where the market went up and down. This was a crucial support from yesterday's point of view. So we can keep these two. This was a Morobuzo candle where market decided that it's going to go down. So Morobuzo is again a decision making candle because it consists of 100% sellers because there are no wicks. Yes, this is one selling area. This is one selling area. From taking the clues, so market opens within the range, comes back to CPR and forms a, what is this? Evening star. Very strong Morobuzo candle. And where is this candle going down? From the central pivot, which is a resistance, and this central pivot is nothing but the previous day range breakout. So this was your first clue. This is where I entered and made money. I made around 10,000 rupees. Unfortunately, I cannot do a full-time trading. So that is my target. I did exited, started focusing on my work. Yes, exactly here on 15th minute candle, I made finish my day trading for the day. When I came back, I had some time in between. This fall had already done. So usually a vertical fall can go for maximum 5-6 candles. So this was around 6 candles. So I knew market would consolidate in this area, and that's exactly happened. And today was expiry, but I mean, that's how I trade. But for you guys, this was the clue. Even yesterday, I had informed you in our channel, I had advised you, do not fight here. See, this is overlapping candles. Do not fight here. In a range trading, all beginners will fail because to understand the range, it takes 1 to 2 hours. By that time, they would have exhausted all their trades fighting with the market. When market goes slow and in consolidation, most of the beginning novice traders will fight the market thinking it is easy to read market. But in sideways market, you have to avoid trading or limit your trading. And the best way to trade is trade at the top of the range towards sell side, buy at the bottom of the range towards upside until unless the range is violated with a strong candle. Now this violation happened here. So this was a strong selling area and this exactly happened here. Now whoever fought in this sideways market wouldn't have taken this trade at all. I was a beginning, I'm a novice trader once upon a time. So I know how a novice trader thinks. Why he wouldn't have taken a trade here? Fear. He would have lost all his confidence over trading in this sideways market, and he would have lost confidence to take when market is giving him. Trust me, I entered with 20 lots, made 10K. I entered somewhere around 10,000 80 90 rupees, exited at 99, but this went up to 200, which now by the way, I trade only in Nifty options. Okay, which one I did? So morning trade, because my work starts at 9:30. I tend to trade finish my trade before 10 o'clock, but this one is 17,950 PE. So I exited at 101 something from 91. From 101 it went to 224, 230, I believe, so around 100 points. Now why I'm showing this is, I'm just showing you so that you guys have confidence in my analysis. So without me showcasing how much money I'm doing day in and day out, I will just be a talking parrot, isn't it? And I'm making this amount regularly by trading only Nifty. And the reason for that is I'm a full-time professional worker. I work for an IT company. So I trade only when I have time to trade, and my trades won't last more than 5 minutes. But anyway, whatever I'm teaching you is learning purpose. So I'm not asking you to take a trade, but understand where are the buying and selling areas. For me, buying and selling areas are nothing but decision making areas. People call it supply and demand, people call it support and resistance. They have different names for it. But rather than just focusing on the names, understand who is moving the market. Market is moved by the market participants, buyers and sellers. Now, when you just go a little deeper and understand, okay, now who is gaining strength? That is where you will get the clue. Now, could anyone would have been able to take this entire trade from here to here? 100% yes. I know people who trade professionally and who capture the maximum moves. Not this part. I'm talking about the fall. Now, how does one can capture this fall? Now, time and again, I have told you, even in yesterday's video, day before yesterday's video, I keep telling you the risk taking should be near the pivots, and especially when a pivot breaks after a range day, if it breaks R1 or S1, you have to take the risk for this vertical falls to make money. So if you're taking risk here, if you're taking risk here, because price never goes in one direction, price keeps going up and down, because multiple buyers are buying and selling simultaneously. So that's the reason price will not fall in one direction. So it will always within 5 minutes or 1 minute or 3 minutes keeps going up and down. So along with that, we have option Greeks to play. So I don't know how option Greeks works, and I don't know how open interest works. I'm being very true to my method of trading. I follow pivots and price action. Now, cutting short of all the talkings, this is previous day low. So you have an opportunity of going short here. You can see where there was a fight. So if you had shorted below the third candle and kept targets of S1 and S2 and S3, you would have made money. A lot of people will ask me, sir, I don't know how to trade. I'm afraid. Everything after market, everything looks nice, but I'm not able to trade. I cannot keep I keep exiting early. So this is one method which most of the professional traders use. There's another method I will tell you. The one method the professional traders use is, this is 8-day moving average. So most of you should be aware that moving average or exponential moving average, everything is lagging. So nothing will beat the price action, because price action is the ultimate way of trading. But if you have understood the price action, like market is falling, it is in downtrend, and it's a sell on rise market, because 3 consecutively we have descending CPR. So on a shorter time frame of 5 and 15 minutes, you should always look to sell at the top near CPR or near any pivot with the price action. This was a morning star, so you should have entered here or you should have entered below S1, keeping target of S2. Or this 8-day moving average shows when price comes closer to this, you can enter here or below the previous day low, keeping price closing above 8-day moving average as your stop loss. So usually this captures maximum moves in Nifty and Bank Nifty. And if you see the vertical move, this is where you could have exited. Now you may tell, no, even this is very difficult for me. I'm too afraid to trade in the market. Then this EMA set is for you. So this EMA set is nothing but it's a triple EMA set. This is 34-day EMA, 15-day EMA, and 5-day EMA. The beauty of this EMA is each EMA set acts as support and resistance, and it works both in uptrend and both in downtrend. So this EMA set crossover happened yesterday, so market was in downside, and look where the resistance happened. The resistance was a central pivot, which was a confluence of 34-day EMA set. So here you knew that market is going down, and if you had entered here, people who has courage, they would have just waited until the price closes above 5-day EMA set or 15-day EMA set. Most of the times they in a strong uptrend, they'll keep as 15-day EMA set, because this triple EMA set, as said, each EMA set acts as resistance in downtrend and support in uptrend. See here, suppose you waited for first 15 minutes, allow price to come here. This red candle near 5-day EMA was your entry. You missed S1, so you're doing multiple scalping trading without keeping stop loss. You're too afraid. Still, it follows the 5-day EMA set. What would be your exit? I told above 15-day. Market comes back. See, near the 15-day EMA, you have the resistance. So your exit was here. If you follow pivot, you know S1, S2, S3, okay, near this pivot, you watch the price action, yes, and you have some kind of positive divergence. Market is going down, but RSI is moving up. So this is not a sign for counter trade, especially on expiry, but to be cautious and exit, you're cutting down on your positions and booking profits when you see this positive divergence. This is how you should have traded. But a pure professional trader, a pivot practitioner will not use any of it. He will just follow this because he knows the trend. Near CPR is the selling areas. 1, 2, 3. What would be a stop loss? Just above the upper circuit of CPR. And you could have just followed the targets S1, S2, S3. So you can also watch the price action. This is weekly low or high. This is weekly low. We have S2. So price did not flinch or blink an eye. It just broke it. So here it comes, goes up. So your stop loss should be about this. But then market went down. So the target is S3. If you have entered a central pivot, usually people book at S2 or S3, or they keep 5-day or 8-day EMA, and once the price closes above it, they exit, and that's it, done for the day. That is how you're supposed to trade. How did Bank Nifty work today? Nifty Bank, same. From CPR, double top from CPR, morning star near CPR. Probably, yes, it has a evening star here. This is morning star or this is evening star? What do you call? Okay, this is morning star, this is evening star. I don't know. Anyway, I'm too weak in candlestick pattern, but just understand that this is a reversal. Price, the bears tried to push the price down, but they were not able to push the price below this candle down convincingly. So it was followed up by bulls or buyers. So it was bound to go up. So here or above S1 was your stop loss. So Nifty gave great moves compared to Bank Nifty, but definitely CPR acts as support and resistance. And if you know how pivots work, you will not worry about anything else. You will not worry about any other indicators. You will just pick up market on the fly and just take the risk. Every trade is a risk, guys. Remember, I keep telling you, every trade is a risk, no matter how expert you are. So either you should have a daily goal like me. Once the goal is hit, exit, focus on other work. If you're a full-time trader, you need to trade as less as possible. One trade, capture maximum points, and done for the day. So today this was one opportunity. Suppose if you want other opportunities, you can watch here. See, this is a wick to wick, wick to body engulfing candle. So this is forming near the double top. This was kind of what do you call morning star? I'm mixing things, right? Yeah, some star. So you have a doji followed by a red signal indicating price is going down. Around same area you get wick to body engulfing. This is 1 week candle. Trying price to go down, followed up by a green candle, but green candle does not give a follow up but gives a selling pressure. So this was your sign to take scalp some points. And again, you have to scalping works with your risk to reward. You cannot keep longer targets. If you're making 5-10 points or 15 points, you should exit. That is how you should be trading. And this I said weekly low and S1. So around this area, we have a double top. So you should exit. So usually I mean, these are not proper trading areas. On an expiry, I usually close my window before 12 and I don't even trade after 1 p.m. Maximum 1 p.m. So after 1 p.m., because of the volatility and contract expiry, the price will be oscillating so wild that it is nothing but gambling. A lot of people tell trading is gambling. You take a bet, etc., etc. But make no mistake, trading is not gambling. Trading is a profession, and every profession cannot be a gambling because if you are driving on a busy road, then it will also be considered as a gambling because you don't know which driver will drive how. So you are just considering based on experience how each one will drive, and you will be driving keeping your safety. Similar to driving a vehicle on a road, you have to trade in the market keeping your capital safety and profit in view as the goal, so that you master this and keep trading regularly and enhance your trading skills to make the maximum benefit. Thank you. Little bit of Gyan session, but I thought I should give this because most of your folks have missed the trading today. We can get some learning videos this week. Hopefully you will learn better along with this chat analysis. Thank you. Have a good day. Have a great weekend.